in that respect, I think in Hong Kong right now, up to the end of last year, they got about 200 licensees listed on the SFC registered. And about 30% of them are my clients, or I help them to get the licenses. So we are also one of the pioneers in virtual assets. So we got the first Beam virtual asset trading platform through. We also did the first tokenized fund. We are also the first to arrange and distribute tokenized securities. And of course, the latest one is we also the first one to launch, help a client to launch a structured product with crypto underlying, but it's done in a more like a DeFi way in terms of how it is hedged. So these are all first in Hong Kong, but our motto is we stay very low profile. We don't come out to brag too much about it, but once we attend like conferences or give talk, like today, I would love people to listen more to what we have to say because we want to get more practical experience of what we have. So just to let you know what I'm going to talk about today, first of all, an overview of what Hong Kong's framework is all about, and then give you the latest development about e-dealing via custodian. The latest two is very interesting because SFC decides to give it to us as a Christmas present on the 24th of December, right on Christmas Eve. So they went on holidays while we have to read the consultation conclusions. So very much a big thank you to SFC.
Every year.
Yeah, they do it every year, by the way. They do it during Christmas and Easter. So just be wary about Easter time as well. Before we go into the actual framework, I just want to introduce a few terms to you, I think, which is useful for you guys to know. First, there's a few terms that we use in Hong Kong interchangeably. Securities, virtual assets, and real world assets. Securities, we all know, is like the stocks, bonds of this world. Virtual assets, you talk about BTC, ETH, but specifically in Hong Kong, it excludes securities. Real world assets, now in Hong Kong, we talk about mostly about tokenized securities and digital securities. Tokenized security is more like just a wrapper, so essentially it is still a security, but it just have a DLT wrapper outside. So it's not on chain. The ownership is not on chain. It's like a mirror image of what we have. Digital securities, which from my recollection in Hong Kong, nobody's done yet. We're pushing SFC to at least get one launched. Literally, that is the whole structure is more bespoke and it's all everything, including ownership, is on chain. So that one, watch the space. We are trying to push SFC on it, but yet to be successful on it. Okay, with these terms done, I think it's useful to talk about the current framework. Now, last year, I think the Hong Kong government and the regulators like to use acronyms. I think the government used LEAP. For the sake of me, don't ask me what it actually means. SFC used the word aspire. So first of all, you have to talk about, you need to have access to the market. You need to have safeguards, products, infrastructure, and relationships. Buzzwords they like to use. I'm more into on the ground, but we have to go through framework, so let me just introduce the high-level concept they have. To that, the SFC is same business, same risk, same rules. So literally, if it's the same product or same business they see in securities, they apply the same rules and regulation in virtual assets as well. And actually, this is more like a reflection from IOSCO, and SFC sits, I think, as a co-chair of the virtual asset committee. So that's why the buzzword, I think even in IOSCO is used the same language as SFC does. So obviously in Hong Kong, the current legislation on virtual asset surrounds, by two legislation. One is the Securities and Futures Ordinance, which literally deal with security. So in essence, we have to deal with the security tokens and what have you. The second one, which is more virtual assets, which is non-security, that's under AMLO, the Anti-Money Laundering Ordinance. And of course, there's also a big hurrah last year about Hong Kong, which is the HKMA on stablecoin ordinance. So if anyone wants to talk about it, you can ask me later about my views on it. Okay, overall regulations in Hong Kong. I'm trying to be clever here and set out several things for you on what I have seen in Hong Kong and what the upcoming changes may be in Hong Kong. So the first one I think everyone wants to talk about is the trading platforms. We have been dealing with the trading platforms since 2019 or 2018, since the day we actually started our business. So at the moment, you need to get the Type 17 license in Hong Kong and the AMLO license, okay? There are certain legal advisors in Hong Kong saying that you can just get the one, i.e. just the AMLO. sort of license and do not need the SFO license. That I can assure you is wrong. You have to get both licenses. From SFC's point of view, they reckon a token may be a security further down the line, so they don't know. They prefer you to get both. So the lawyers got it wrong. The regulators need both. Okay. So going forward, because of the new legislation, the Christmas present that I mentioned about, the VATP may need to apply for a VA custodial license under EMLO. That's coming up, which I will explain further later. The second one, again, is a Christmas present from SFC, VA OTC. There's lots of hurrah about it in Hong Kong previously because there is no license. When I start a VA business, when I do not touch upon any securities, I can literally, let's say myself or Carrie can start a business in Hong Kong without license at all. Now, with the new license coming out, that would not be the case. So this legislation will be coming up probably at the end of this year or the start of next year. But there is a caveat there, which I'm going to talk about later on stablecoins, but let me put you on tenterhooks at the moment. The stablecoin audience sort of muck things up a little bit there. The third one is about VA dealing services. The question is, what's the difference between VA dealing and VA OTC? In essence, the same. VA dealing services is what is being offered under Type 1 dealer broker-dealers of license at the moment. So it is a licensing condition that the SFC imposed if a broker-dealer in Hong Kong, a Type 1 broker-dealer, want to deal with VAs. But there is restriction. You can only deal with the VA TPs in Hong Kong. You can't link up with overseas virtual asset operators, be it the Binance of this world or anyone in Singapore which is licensed. So they will not allow that. Again, just to throw in the upcoming licensing regime, even the Type 1 broker-dealers will need to apply for that new license on EMLO. And according to SFC, they're thinking about whether to introduce margin sort of new business to this particular license. But it is still under consideration at the moment because in Hong Kong, everything is pre-funded. You can't have margins, okay? The next one is distribution of virtual assets related products. So you talk about maybe structured products or crypto underlying. You talk about other typical virtual asset products as well. At the moment, as long as it's a security, you do it under Type 1, and maybe a Type 2 if it involves future contract, for example, the CME products. You can actually distribute in Hong Kong under Type 2 license. Now, this is a big thing in Hong Kong that nobody really talks about right now. End of this year, and maybe by second 2Q of next year, the Type 11 is coming out. The Type 11 will encumbrance and will pull in all the derivatives transaction that not only the traditional market does, but also in terms of crypto. They are already asking our views as to what needs to be done for the crypto side. But again, this is a very big topic, so if any of you is interested in derivatives, OTC derivatives on crypto, you can speak to me afterwards because I think within the time frame that we have, I don't think I can talk much on this at the moment, but this is a very big topic. The next one is about distribution of RWA and tokenized securities. Everyone is interested in that. So at the moment in Hong Kong, if you do tokenized securities, pure distribution is easy. If you want to start arranging deals, are you going to arrange, or even let's say how you mint and burn the token, which protocol you're going to use? If you arrange the whole deal yourself, that is a much bigger undertaking, and SFC will ask much more questions as to how you DD a specific protocol and what have you. Okay. Next one, VA advisory. I think this one is easy. Just advisory on V8. Again, the new regime is in consultation right now. SFC may be issuing a new license under VA advisory under EMLO. The next one is portfolio manager, asset management. At the moment, I know one or two of my clients are here. The VAPM, you can uplift it. At the moment under Type 9 to do virtual asset management. But SFC is consulting the market to see whether there should be a specific license to do with virtual asset management. So that's a more specific license that's coming up. Okay, the next few one is interesting. Staking. In the consultation conclusion the SFC gave us during Christmas, they say they want to think about staking. Now, they have not been specific on as to what they will allow. They say just under consideration. But from our previous dealing with SFC, when I think there's 1 or 2 Hong Kong ETFs that has done staking, it is very narrow. Most likely single node only. Each one's not like your normal, you have multiple nodes dealing with it. So it's just single node. Because they're worried about commingling of assets and what have you. So, but at least it's a start. So they're thinking about it, but they want to extend it as to issue a proper circular and give us guidance on what can be done in that. Custodial service is another big thing that SFC has come up with the Christmas present. So the new law will be coming in later this year and next, and I think before all these are housed under either TCSP license or trustee license, and there is a huge AML risk inside because people start to do transfer among beneficiaries under the trustee ordinance, and I think everyone knows that this is a bit risky, but SFC has finally decided to regulate that. Now, last one is about loans and other businesses that VA has. SFC recognized that there are different business models for these, and they need to look into it. Again, they're non-committal. They just recognize that there's this business going on, and they say they will look into this. So let's deal with the Christmas present that SFC gave us. VA dealing, what we in Hong Kong term is VA OTC. So one of the first questions, again, similar to VATP, is can I just apply for an MO license without the SFO side? For my initial discussion with SFC, the answer is similar to the trading platforms, the answer is no. Because they're worried about the tokens that you're dealing with may be classified as a security in the future. So at the moment, you have to apply for both, okay? Both the type 1 and in the future the VA OTC license under MLO. Whether this will change, we don't know because the law is being written right now. SFC may be discussing with us or with the marketplace more on it, but this is a space that you need to watch out. The other one is to talk about the VAD license under MLO. I don't want to sound crude, but SFC has been relatively straightforward as to how they deal with the scope of VA dealing. In the sense that if you look at the law in Hong Kong about dealing securities under Type 1, the same definition has been repeated in dealing in virtual assets. They just changed the word securities to virtual assets. So in some sense, it's helpful because if you think about it, anything that the traditional market does under broker-dealer license that SFC has been traditionally telling us what to do, internal control setup, and what have you in terms of your whole compliance framework, is all applicable in the new regime. So literally it's same business, same rules, same risks, okay? So they're just flipping it over. But they say they need time to write that law out. Don't know why, but that's it. So the key requirements, again, it's a mirror image of what we have in the SFO. So in terms of capital requirements, so it's 5 mil Hong Kong dollars for paid up share cap, 3 mil Hong Kong dollars for liquid cap, okay? But again, unwritten rules here. There is an excess liquid capital requirement of 12 months operating expenses. Now, this one you can discuss with SFC. Previously, when we've been dealing with SFC, at least in the initial stage, when we do the Type 1 application, it's a strict application of 12 months operating expenses. Nowadays, you can talk to SFC whether we can talk down that number from 12 months to 6 months. But this is, it is no rules in it. You have to discuss with SFC and convince them that it's okay just to keep 6 months operating expenses. Of course, the AML, the AML stuff is also very important, how you do due diligence, how you do with, let's say, the KYAs of this world. Wallet screening is also very important. So the normal stuff that you deal with in terms of your crypto sort of onboarding also applicable in the new license, okay? Operationally, I think they always ask for experience. This is very hard to have right now, but I can tell you SFC's requirements on that at this moment of time is pretty low. They just need you to take a CVAP sort of exam at the moment. In the future, whether that will change, again, we do not know because they reckon, because at the moment the broker dealers, the normal Type 1s of this world may not have the experience, so there's letting people off a hook a bit in terms of just getting you to the exams. Okay? In terms of investor protection, the normal stuff also apply, okay? Suitability, knowledge, risk profiling, risk disclosure, and of course education is all there. The one which has always been an argument when we do application for our clients is the exposure limit. I keep on emphasizing the client, they always ask, is there a magic number we can use? My answer is always, it's up to you. It's your business. I can't run it. The exposure limit depends your risk appetite, how much your client wants to be exposed to. You have to decide. We can give you some certain sort of ideas as to what to do, but we can't set it for you. So this one, not shirking responsibility. This one, you need to think about it yourself. As I said, there are things under consideration. The pre-funding part and the margin trading part is SFC has been pretty much discussing with us on and off. My advice is if you want to do this, come up with a good plan and discuss with SFC upfront. From my experience working with SFC, if you have something new, they do not mind talking. 2 years ago or several years ago, I think they won't even talk to you. Now they're much more open in terms of discussion. So you can actually talk to them and tell them what your plans are and see what the feedback are on these issues, including the staking, the non-VAT piece connecting with overseas. I think these you can discuss with them, but I think the latter one, the non-SFC VAT piece, is harder to deal with right now because you can understand from Hong Kong's point of view, the local trading platforms would not like you to connect with overseas. They would like you to connect locally. But I know from OTC desk, of course they want to have the option to connect with overseas. So just watch this space. I think initially it's very hard for SFC to change, but further down the line, once the trading platforms get more sort of mature, I do think that will change. Okay. Another thing I just want to briefly mention is about decentralized securities or DeFi related protocols. SFC has not come out to say we are regulating DeFi or anything to do with DeFi related matters. But I think the main question is whether you have done your analysis yourself. So from end to end, if it's a security transaction, it will be regulated because it's a security. But we just don't look at things on the surface. You really need to look at end to end, operationally, how it's done. Because I can tell you SFC take a very liberal approach in the definition of securities, especially on CIS, collective investment schemes. Just to share with you, they think even lending protocols in DeFi could be CIS. Okay? They are taking a very liberal approach. So be careful, think about it, okay? Okay, the grammar that I want to talk about, stablecoin ordinance. Now this came into effect in August of last year. And I can assure you when it was launched, there was a lot of chat about it. In particular, there is a prohibition saying that unless you are licensed, you can't offer stablecoins in Hong Kong. And the word offer, I think, is the gist here. Because to SFC and also to HAMA, the simple fact that you're referencing your stablecoin in trading pairs, that is enough for them to think that it's an offer. The fact that you post that sort of price on your website, to them is an offer. So a lot of people did not know that. So once the legislation come in, everyone went a bit crazy. So a lot of the market makers, liquidity provider was asking what could be done. So this is something that SFC and MA knows, but they haven't taken much action on it yet. Okay, even the police knows about it. Okay, so I think they're giving you time because I think the ordinance itself, when it's launched, I don't think it was consulted well enough or people are smart enough to realize this. So a lot of things have gone missing. My advice is try to get a license early because you do not want to get into trouble because let's say further down the line you want to apply for a license and then SFC realize that you're actually conducting stablecoin related businesses, they will not think that you're fit and proper. So you have to make sure these things, you have to think about it beforehand. Another important point is payment service providers in Hong Kong. A lot of people think that initially, especially in Hong Kong, I think it was 2 years ago when the first consultation came out, the payment service provider, the MSO of this world, money service operators, had been under the ambit of Customs and Excise Department. And a lot of people said, oh, this has nothing to do with me. Okay, this is state SFC related, investment products related. But I can reassure you guys, CED, custom and excise, is not involved in stablecoin or not involved in anything to do with virtual asset trading or LTC desks anymore. All the legislation now has been passed to SFC. SFC is the person in charge. So to me, there's a gap at the moment within the legislation on payments. So you can do the VA dealing, you can do the on-off ramp, but you can't remit outside because SFC does not deal with remittance. They deal with investment products. So what they're expecting is once you do the trade, you can take out yourself. But you know, with payment services, I can supposedly I can remit outside to an independent third party, with a proper invoice, obviously, but not with SFC because they do not know. Okay, they do not deal with that. SFC do know about it because we did make a big effort to tell SFC about it, but they were not able to change the law at the time. So they just noted in the consultation conclusion that there is a gap, so they will look into it. So let's say if you are a payment service operator in Hong Kong, I would suggest that you start planning on your VA Type 1 broker-dealer license first, and make sure you portray to SFC your business model, i.e. you are a payment service operator. You need that license from SFC to operate properly without breaching the laws, okay? Well, custodian, the second part of the big SFC sort of Christmas present. So for this, SFC is looking for people who keep virtual assets and to look after the management of private keys. Okay, people who really look after your virtual assets. All these people would need to have licenses given to them. Okay, and SFC recognizes this and want to legislate and give license so that they can look after these guys and make sure they're properly regulated. Because at the moment, people just get a TCSP license, as I said, or a trustee license, which is very, very lightly regulated. And they reckon this is a very, very sort of risky undertaking right now. What is out of scope at the moment, I think it's worthwhile saying. People just monitoring assets, you do not need to get a license. Fund trustee, no need. People who have independent access as well, there's no need. But otherwise, you will need to have a license for custodian. Although the black part of this presentation said that SFC seems to be technology agnostic to things, but I can assure you, working with them, they are more into HSM than any other solutions. If you are interested in this particular license, I would suggest you start talking to SFC straight away because there is a pre-application process going on. On this point, I think I would love to bring you back on both of these fee dealing and custodian license. Because SFC, unlike previously, they decided that there will be no grace period, no grandfathering, and no deemed licenses. So that put a dampener on a lot of things. So unless you're in the market now, let's say it's VA dealing, unless you're in the market now and have the, let's say, Type 1 with VA dealing services uplifted, by the time, let's say, the legislation come in at the end of this year, let's say, for example, on the 1st of October, you are not allowed to operate in Hong Kong because you haven't got the right licenses. That has been adamant. So my suggestion is, because the requirement is just the same in terms of capital, get in early so that your operation in Hong Kong can continue. They are braced for that. They understand that. Some people have been advising people, oh, can we just go in and just register with SFC that we will do the application when AMLO kicks in, the new legislation coming in. Yes, you can. But the thing is, if you think about it, at the time, SFC may have a bunch of applications to deal with. Your application will not be at the top of the pile. So by the time the legislation is effective, you can't operate. Custody, similar thing. Although there's not a license right now, SFC does have a team set up specifically to do with custodian sort of license. So there's a pre-application process whereby there will be a few get-to-know-you emails and even arranging meetings. And then thereafter, you probably have to go through a pre-application process for them. So if any of you are interested, again, get to the action early because you do not want the process to be delayed. Okay, the uncertainties, I said the technology part, back to the custodian license. The uncertainty part is not too sure. The due diligence part on the tokens, what can be taken in the custodial services, is a bit of an unknown. So if you are into the Hong Kong market, you will realize the likes of OSL and Hashkey, the tokens that can be traded on that platform is not fast. Okay, so there are issues, but SFC is trying to deal with it. The transfer and payment as well. How do you do the peer-to-peer sort of transfer? SFC has not come up with any sort of rules and regulation guidelines on it yet, but they know what's going on. And of course, the operation standards that we mentioned before. These are things that SFC sort of recognize, but haven't come up with a good detailed game plan. Now, because fee dealing is very akin to a Type 1 license, so there's no need to discuss about individual requirements or the group requirement. But for custodian services, it's a good question to have. So if I operate a custodial service, who actually needs to be licensed? So according to SFC, it's anyone who is going to use to manage the private keys everywhere. So in essence, almost everyone within the custodial firm needs to be licensed, except the administrative or the clerical staff, according to SFC. Okay, that is what is expected from SFC right now. So you have to talk about the senior management personnel, people who have authority with the keys and client assets. Okay, approval rights, people with approval rights, you need to be licensed. And you have to decide whether it's the responsible officer or the licensed reps. So who's the senior and the junior, you have to decide all that. And of course, we talk about who is exempted from licensing. As I said, it's just the clerical staff. At the moment, SFC's regulatory focus is definitely on control and access. So people have control and access, you need to get the license right now. But again, this is very initial stage. We are dealing with several pre-applications right now, so SFC is trying to understand the industry from actual applicants. Very well that they did the sort of consultation with the industry, but actual application, when people tell you how we do things, this may change down the line. Okay, the requirements. Financially, you can see that it's quite prohibitive in the sense that you have liquid capital just 3 million, but your paid up share capital is 10 million Hong Kong dollars. Okay, and then you have all the, again, the hot code wallets of allocation that you need to consider, and also the access controls. I can tell you the whole application is very much a mini VATP application, minus the exchange or the trading part of a application. Because SFCs have a feeling that this is a very important piece. So in terms of your cybersecurity controls, your access controls, okay, your wallet structure, they're very interested in that. So it's not an easy application to deal with, and it's very likely that you have to engage third-party assessors to come in to conduct an external assessment. So if you talk about action plans of what needs to be done for these licenses, as I said, you need to have a strategic review internally as to what you want to do, whether you want to come to Hong Kong, are you operating in Hong Kong, what you need to do, and then think about how I'm going to set up in Hong Kong in terms of your senior management and your whole technology stack. You have to start thinking about it. And also, the second part, I think is very important. Don't be afraid and talk to the SFC about it. Even though in the end you decide not to come to Hong Kong, because your business is in Hong Kong, do engage them to have a more proactive engagement and talk to them about your issues. Otherwise, things will be lost, okay? They need to know what's going on, because otherwise they will go onto their own little path and their own little rabbit hole, and they will not take care of your considerations. Yes, I do understand SFC may not listen to everything that you have to say, but at least say it, because otherwise they will not know what your business model is like, okay? The last one, of course, is the preparation, in terms of due diligence and compliance and reporting frameworks. It's different. Before, nobody is governing you. Now, it's all about being regulated. And in Hong Kong, one of the most important things that you need to think about when you are being regulated is your internal controls and documentation, your record keeping. A lot of people that we've seen, be it traditional players or crypto players, they fail to do documentation. So once SFC comes in to do on-site inspection, I heard it's different in Singapore, they will come. Every 5 to 7 years, SFC will come to do inspection. Okay? You will not get away with it. So make sure the documentation is there. And SFC has a habit of looking things recently, as in the first 6 months. If they see that your record keeping is not good, they go for 1 year and 2 years. So of course, when you build a business up, initially it's easy, okay? But you have to have that habit of documentation. It's very important. So anyway, because I think we have other things to talk about in terms of the panel to talk, hopefully this session will give you a pretty high overview of what the Hong Kong regulations are all about.
And so for the panel, we'll talk about three main themes. So basically an overview of, again, a quick review of the Hong Kong landscape, and then a comparison in terms of the Singapore and the Hong Kong regulations. We also touch on the talent and also products and services before we wrap up with some, again, takeaways, right? Okay, so to kick off very quickly, right? So just a quick review of the Hong Kong landscape. So Louie, earlier you talked about Hong Kong regulations taking a very phased approach. So in terms of digital assets, we started with exchanges, and now it's custodians and dealers, and next is asset and fund managers, right? So how do you assess the overall sort of architecture when it comes to the regulations and the thinking behind it?
Well, Hong Kong taking the view that it's a very much an investment product sort of approach. That's why SFC is like imposing like same products, same rules, same risk sort of concepts. I hold a very different view from SFC because I think virtual asset does offer more than just an investment product. They're thinking to me too narrowly, but in terms of a first step to get things started, I think Hong Kong has taken a very conservative approach to do step by step. Don't get me wrong, I still support them wholeheartedly that they're doing things correctly. But I think we have to start thinking about besides the normal products that we've seen, dealing, advising, and all that. Is there more to the virtual asset world than these like topics? But I think as a framework, it's good to have. But as I said, the things that we miss in Hong Kong, payment services, which I'm sure Chris being in Singapore and also operate in Hong Kong as well with his company, will share a bit more. It is that there will be gaps. And my concern is when there are gaps, people will take advantage and there's a risk to the jurisdiction.
All right, okay, so to delve a little bit into the challenges, right? So Chris, to you, right?
Yes.
So how do you assess, the opportunities and the challenges regarding to the Hong Kong regulations and, the approach?
I think, sorry, I hope you guys can hear me through the mask because I'm having a cold. So I think one of the main challenges in Hong Kong is how, as Louie said, the regulatory framework is evolving, is coming out in bits and pieces. And so even as it is evolving, the regulators themselves are a bit uncertain how much they want to loosen up. So as an current applicant for the Hong Kong VATP, we have been giving feedback to the SFC that 98:2 hot-cold ratio is really, really tough and challenging. But the SFC still holds a let's wait and see, right? They did indicate that they may revise it, but we are still waiting for it. And if VA custody is still coming out as 98:2, it will offer significant challenges as compared to other parts of the world, like Singapore is 90:10, right? So I think this is just one example. And also in terms of treatment of stable coins, how it's restricted to PIs, I think all of these does make the regime in Hong Kong a little bit more, for lack of a better word, more challenging, right? Because in most jurisdictions for retail users, you may have a softer restriction. So the friction will be to take a knowledge assessment test in Singapore. Once you are deemed to be aware of the risk, you can start trading in digital payment tokens or virtual assets in Singapore. But in Hong Kong, it's a hard 8 million Hong Kong dollar kind of a proof of liquid assets. So I think this is some of the key differences between, let's say, Singapore and Hong Kong. And I think some of the current rules in Hong Kong does pose quite high challenges to applicants.
I think maybe there's some ways that it provides some sense of safety or security, but I'm sure.
Yeah, I think just to echo what Chris said, I mean, as I said, wholeheartedly support Hong Kong, but I think what happened when we started this journey in Hong Kong, I think in 2017 when the first circular came out about ICOs, I think. How should I say this? The industry itself has not been too forthcoming to talk to SFC. Only in the last couple of years when SFC seems to be more open and the industry is much more open to talk to SFC, I think SFC start thinking, oh, the industry is thinking differently. Okay, I don't think they're being parental
Yeah.
Okay, but it's just that nobody talks to them. So at least when we are in the picture, we do talk to them off record as well, quite regularly, and say, hey, this is not how things are done. But it's only one voice, so we need the industry to be more forthcoming to talk to them. I think it's required. Don't be afraid to talk to the regulator. You're operating in Hong Kong or you're operating overseas, you want to come to Hong Kong. Let them know the challenges. Otherwise, they would not know. They'll just say, oh, what I'm doing is right. Typical example is 982. I can tell you up to this point, they still think they're right. Okay? But obviously, other jurisdictions does not think so. So it is a point that we have to let the SFC know the 982 or whatever that you have a gripe against in terms of regulation, you need to let them know. Another pain point that Chris, we also chat, behind the scenes, the things that we're against is the 8 million. They don't even count virtual asset, the crypto, as part of the asset that you can count towards the 8 million. So that to me is it's a bit of a downer for us.
Right. Yeah. You focus quite. You and Chris focus quite a bit on the challenges.
Yep.
Can you maybe talk a little bit about the opportunities?
Opportunities, I think, for the past 2 years, I think it's good. It is a bit loosening up. As I said, you can talk to SFC more. As you can see from us, we are probably the pioneers in pushing SFC. I do not want to use the word we challenge them a lot. It's just that we work with them saying, hey, I got this product, let's say structured product. Sorry to brag about that. We are into that because I used to, when I was at SFC, I looked after derivative structured products. So I sort of know the rules around that. But if you can think of a solution whereby you can address the SFC's concerns, they will let you do it. That's why I make an effort to mention about margins. Again, they already say that we are thinking about it. Why don't you come up with a plan and tell SFC that this is our plan, we want to do it now. Please have a look. I can tell you they will seriously look at it now. We're doing the same with derivatives and perpetual futures. Yes, I know Singapore launched already. Hong Kong is looking at it. We've been at the forefront of it, and also with other like options and swaps. You have to talk to them and let them know your business plan and how you address the regulatory concerns. Because there's no point waiting for the regulator to come with rules and regulations. You can't wait. Yeah. It's up to you to tell them. And as long as you think it right, don't just talk about business. Think about what the regulators are concerned with, address the concerns. They will appreciate it and they will help you out.
Well, at the end of the day, it's not just changes to the technology, right? It's changes to the whole society, how we think about money, and how we think about the way we exchange value and what payment means, right? So I think there's the continuous feedback and educational process has to continue, right? Yes. Yeah. So you briefly touched on the opportunities and the challenges, and also a bit of the principal differences between Singapore and Hong Kong. Is there anything else you want to add before we move on to how we look at which one is better?
Well, I think at this point, I think I'd love to get Carrie involved, because I think one of the best things in Hong Kong is, in terms of talent pool, sorry to say, we have much more talent. But I think that part, Carrie can talk about more of it, how you acquire talent in both jurisdictions. Right. It's a bit different, but I'll leave it to you, because that to me is also a distinct advantage that Hong Kong has, and we do have a little bit more talent. I won't say a lot, but a little bit more.
Right, okay. Carrie, do you want to step in to talk about how you see the talent in Singapore versus Hong Kong? So, sensitive topic.
Sensitive for her.
Sensitive for all of us.
A little bit different, the opinion compared to Louie about talking about talents, right? Because I have been in this field for 7 years since I left traditional finance space, right? I cover both Hong Kong, Singapore quite a lot. What I've seen that actually, I feel the talent in the digital space actually in Singapore is more. Why? I think in terms of the in Singapore that we have a better the institutional footing about the whole structure. So as such that it attract variety types of the the digital assets, the operator in Singapore. For example, we have staking, we have stable coin, and then we have the DEX, we have the CEX, right? So we have a different variety in here, and which means that it will also to pose a lot of the demands of the talents around on the digital space. And also we have a lot of like the big player in Singapore, for example, Coinbase, the crypto.com, OKA store that recently retrenched, right? But still, and all those big companies that they will also help to develop a lot of the talents in the space. So that's the reason why that for me on the ground, and I'm talking to the candidate every single day, and actually I feel that Hong Kong is relatively has more talents.
Yeah.
Hong Kong or Singapore?
Singapore.
Yeah, I agree with, well, in that sense, yes, because Hong Kong hasn't developed that, because the regulation is not allowing, but the fact that now they're opening up.
Yeah.
I think that would be.
I think Singapore has a slight advantage in that it started the journey a bit earlier. So it started in 2020. So with the Payment Services Act and some of the exchanges were already operating in Singapore. So and in the first couple of years, it was very welcoming and supportive of crypto until 22 onwards, where the market crashed and there was some big
And I think especially recently, one of the hot topics we're talking about stablecoin, right? Stablecoin payment. I think. Talking about the DPT license, which is really ahead compared to Hong Kong. So in terms of this, I don't know anyone that which is in the stablecoin payment in this room, but I would say that in terms of the talents and in Singapore, definitely you will easily to find more talents in this space rather than in Hong Kong.
Right, yeah. And of course, Singapore is also kind of like one of the big financial hubs when it comes to traditional finance. So you do see some movements in some sense, I guess, from the traditional finance to this space. So talking about talent, you, Carrie pointed out that there's quite a few big virtual assets organizations set up in Singapore. And I think one of the big drivers behind that kind of presence is because in Singapore we have this regulatory certainty, right? When it comes to MAS. MAS is been seen in the industry in some ways as the, torch bearer for this industry, not just in Asia, but also around the world, in providing some sense of certainty. Do you think that is probably one of the reasons, the certainty when it comes to regulations versus, and also a bit of flexibility as well?
I want to share one of the very interesting things that what I've seen recently, especially in this year. Because of the change of the regulation, I see that there's some change on the talent landscape as well. So let me just give you one of the example, but correct me if I'm wrong. In this year, which is the DPT license, that they become more stringent, and they require, if you're the Singapore company, and you can only solicitate the client if you do not have the DPT license, and you cannot solicit the client in Singapore and also outside of Singapore. So what we've seen that a lot of the company now, they go to either Hong Kong, they go to Dubai, and we see that a lot of the, especially on the institutional sales, and they actually they move to Hong Kong or they move to Dubai. So I'm not sure anyone that need to hire for the institutional sales. That's the perfect time right now in Singapore to hire, because we see that a good talent pool here right now, where some of them that they're not interested to relocate and they have to stay in Singapore, and they are really looking for a job right now. And I think this is also one of the things that what we have seen, that is because of the changes of the regulatory, the landscape, and then it will also to change the talent pool as well.
Well, talking about the changes in the regulatory landscape, right? So over the last year or so, there has been some, comments or feedback that MAS is stepping up, becoming more flexing its regulatory muscle in some way, being more stringent on some aspects of regulating the virtual asset space, right? Do you think that is, giving sort of emphasizing the importance of licensed stakeholders and giving room for these licensed stakeholders to develop further? And I think this question would be to Chris, who has more experience in the Singapore space.
Yeah, I think as regulators are just humans like us, right? So as they get more mature and develop a better understanding of the framework and of the industry, their views will change as well. So certainly I think the regulatory environment has tightened, even though the regulations itself remains the same. How the regulators approach and handle new applications has indeed been tougher. MAS has also taken a page out of the SFC playbook by having audit, like phase one assessor kind of a thing, where you need to have a third-party assessment audit of the controls before you submit a new MPI application. So that is very similar to what the VATPs had to go through in terms of a phase one assessment before the application went in, right? So certainly that bar has risen. We feel it on the ground, but the actual written rules remain pretty much the same. But certainly you're right, the bar has indeed risen, and I think it's rightly so, because over the years, there were some firms that were just on the cusp of a license. They went under because of, I think ZipMac comes to mind, right? So I think the regulators themselves would want to avoid having a repeat of some of these previous incidents, and so they now set the bar extremely high. If they have any discomfort on an applicant and feeling that it is not suitable to obtain the license, they will definitely inform the applicant to withdraw and to resubmit at a future time, right? So I think this is this is what we're seeing on the ground, indeed. Yeah.
Okay. So in terms of products and services, then is MAS giving more room, for the licensed stakeholders to innovate? What is the current developments on that?
I think the definition of DPT is very wide, so that's the good thing. And the service itself allows you to deal, transfer, exchange, so it gives you a lot of space. The only thing that you can't do is DPT derivatives, which is unregulated as of now, but almost everything else can fall within the DPT's definition. So one thing that came to my mind is that, stablecoins is very big this year, and the next 2 years. You can run a stablecoin payments business in Singapore under the Payment Services Act. You can get your money transfer licenses and your DPT service, account issuance or e-money, and then voila, you can do the payments, right? Business. But in Hong Kong, MSOs are still very fiat-based. I think the Customs and Excise does not want to touch crypto. So if you tell them I want to use my MSO to do crypto payments, they will say no, it's not fit for purpose, right? So I think this is where. Is it intentional or not? But this is where Singapore's regime, because of its clarity, because of its broader scope, and because it went it just went out and said you can do almost everything, versus Hong Kong is step by step. So the step by step means it's catching up. So there may be some lost opportunities in Hong Kong if you want to go into some very new, trendy kind of areas, but that's the thing I can probably highlight.
I don't think I can disagree with that. I mean, Hong Kong sounds like steady. I think the Hong Kong motto is don't come near me first. But once you're in, you'll be able to talk to SSC more. As I said, the discussion is always you have to be in the jurisdiction and be a regulatee before you can talk to them. If you're always on the outside, they won't really talk to you. It's just bureaucrats talking to you, so they won't get anything done. But if you are the regulatee, then you can influence them and say, hey, we've got this product, this product. But on Chris's point on the MSO, yes, very fiat-based. In fact, if any of you are thinking come to Hong Kong to start a payments business, the MSO or the CED people will ask you to undertake that anything you do is fiat only, can't touch crypto. So that's why I was mentioning in my presentation there is a gap. SFC does know there's a gap right now. So they will hopefully listen to us and get it sorted out. But in the meantime, because you do not want to be lag behind, please apply for the license first. Get in, because otherwise you're on the outside. For them, they're not interested to talk to you because you're not even getting regulated. You're not even interested to come to Hong Kong to apply for a license. Why should I talk to you? So that's one. Two, the only thing about Hong Kong being more advanced, if you want to put it that way, is on derivatives. Now, not much people know about it, but the discussion is already happening. And I know Singapore already do perps, but in terms of the other derivatives, options, and swaps of this world, it is something that is up to the stakeholders who are now within Type 1 to start talking to SFC about it. I mean, derivatives with crypto underlying. They want to listen to you, but you have to come forward with a plan and just say, hey, can you give me guidance? Which a lot of people tend to do because everyone wants to be just a boy to follow rules. Probably I'm different. I won't say challenge, but I challenge myself to talk to them to say that, hey, I think this is workable. These are the measures I put in place. Can we do this? I think this is the difference, if you ask me, is whether a regulator is willing to take this up.
Yeah. I think at the end of the day, the regulators are still like a little bit behind the industry experts, right? So they kind of
You expect that, yeah.
rely on the industry experts to provide them with the feedback and education aspects as well, right? So talking about products and services and Hong Kong, right? How do you see that developing further, given mainland's sort of approach to digital assets at the moment?
I would say, unlike a lot of people think, because probably I'm more on the ground, I'm actually in full support of the mainland cracking down on it. You just need to work in Hong Kong to realize that the amount of tokens which does not amount to anything being marketed to the public.
Okay.
I think it's right for them to come and just slam down and say, don't do it. And also on the other, what we call RWAs. Everyone is doing RWA. Money market fund this, money market fund that. And then on top of that, I said, oh, but we can actually put an asset in China on chain and can transfer out. This is a point I've been telling everyone. It will not happen. You have to go through all kinds of approvals in China before that will happen. But somehow, I don't know who is marketing in China saying that this could happen on chain. So for the Chinese government to realize that this is going on, massively going on, okay, for them to clamp down, I think it's right. Cool it down first, make sure everything's right. Hong Kong is still the place for China to go to. But I think the rumor has it that this year, around March time, they may loosen up a bit. They may have even a sort of a tentative measure about how to do RWA in China, which I think is a good thing.
Oh, wow.
But whether it comes to these are all rumors, but to me it's a good thing. China is on its own in the sense that we don't deal with them. In Hong Kong we're part of China, but we are very much independent. So it's up to us to tell the regulator that we are doing things which is nothing to do with China. We have no Chinese clients and their assets overseas. Okay? Once you start, you can do the stuff that's allowed under law in Hong Kong. But if you go in and say that I have an asset in China, I want to tokenize this, tokenize that.
Yeah.
Anyone who works in a regulator, actually any compliance officer, is this legal? Because that's the jurisdiction. You don't mess about in someone else's backyard.
Right, yeah. Well, it's a big market, so I can see why people will be quite, excited to look at the whole RWA opportunities in China, right?
Yeah, but the thing is, it's a funny thing, RWA, I'm sure Chris will agree, not everything could be tokenized. Can we? I think this is a good opportunity to say, everyone is massively crazy about it. To me, it depends on the asset. If you're talking about your normal asset, I don't know, money market fund, we need to tokenize every single one of them, okay? I've been joking with my friends before when I came over. I have people asking me, for my views to tokenize the income data. I said, why do I need to tokenize that? What's the how to do it? And what's the value add? There's no value add at all.
Interesting. Okay.
So it's like things like this. We have to put a stop it. But tokenization of assets as a product, I think it's a new way. I haven't got a magic ball, or nor do I think it's a magic formula. But it's a new way of raising money, raising profile. But we have to make sure it's used correctly. Otherwise, people will think that it's another scam.
Oh yes, that's right. Yeah. So I think that goes back to your point about how you think that the regulator clampdown is justified in some ways because there's quite a few scams going on, right? That reminds me of the ICO days in Singapore back in 2016. Right. So just to take a quick step back, right? So earlier you talked about new licenses are being offered to dealers, portfolio managers. How are you seeing the trading volume and demand on to all these new licensees?
At the moment, low.
Low.
Very low. And I can just put it on products and liquidity, which goes hand in hand. Because at the moment, SFC still, from the outside, seem to be very conservative. They do not allow a lot of products being listed on the exchange platforms. I wish that they would be more open up on it, but I'm not them. I left SFC quite a long time ago. But I think they need to be much more, I should say, a bit more liberal in their approach and let the exchange take the flag, so to speak. I'm sure the exchanges, like what Chris has been doing in his day job, they will have robust procedures in place on how to list a token on the exchange. We should be more opening up rather than it's up to the regulator to decide which token to be listed. That's one. Two, as I said, it's up to stakeholders and market participants like us to tell SFC there are other products that we can think about. It may not be listing on exchange, but we can produce like products like structured products or even other ways like tokenized gold, tokenized silver. It may come about that it create much more buzz in the market. But at the moment, I'm concerned, this is me speaking, okay, that the market is a bit stale. And we need to kick it up the ass, so to speak, because we need the products. We need people to think that it is more than that. But I think the same could be said, but less so in Singapore. You just need to have that product and liquidity going on, otherwise it won't work.
Create some buzz around.
Yeah.
So let me just turn to Carrie, right? So talking about, you mentioned earlier, if we are sales, right, in Singapore, it's a great opportunity to hire salespeople. But what about compliance and, anti-money laundering? Because those are very much still big requirements when it comes to digital assets, right?
Yeah, I think if I compare these two countries, it's really quite equal. And also sometimes that when we hire the compliance person, it's also boiled down to what kind of the license that you require, the subject matter expertise that person require. So I give you an example. For example, like in Singapore, I've got some client that they need somebody that will know the in-country, the Singapore, the license, and inevitably that you need to find the talents in Singapore, and you cannot find it in Hong Kong, right? So I think it will tie to the requirement of what kind of the license and also the jurisdictions that which is required, right? So I think this is one bucket of it. And also recently, the trend that we have also seen that compliance, we have the regulatory compliance, we have the compliance operation, which is doing all those KYC, the AML and transaction monitoring. And we also see the trend that there's a trend that which is the outflow of the talents, which means that the company that they choose to set up all those the compliance operation team outside of Singapore and Hong Kong. And which is the best location right now. I think Malaysia is one of the hottest space right now for all those the compliance operation team that's setting up there. We see a lot of I work with a lot of the client that which is stable coin payment company. They all setting up that they move their operation hub that from Hong Kong or Singapore, and then they move.
Just
to,
a cost driver.
I think. First of all, I think they're leveraging, money, right? Which is the cost, right?
Yeah.
Secondly, I think they're also leveraging on the language, the strength of the Malaysia, where they can speak Chinese, they can read Chinese, and they can, some of them can talk about Cantonese and also English as well.
Okay.
I'm not sure, Chris, is it the same insight that
we are one of the firms that
right?
set up our backend ops team in Malaysia.
Okay.
Just for the exact reasons that was mentioned,
Right,
cost, language. Even in the banking days, when I was in TradFi, we had Center of Excellences in Malaysia as well. So it's just a natural progression.
Right. The language is a big,
Even we are thinking about it, so it's normal.
And there's a large group of young people who are all tertiary educated in Malaysia. So talent pool is quite good for.
Okay. So maybe next time we should have a panel with a Malaysian expert to talk about the regulations in digital asset space.
They're very narrow. But they're trying to expand.
Right. Okay, so I'm just quite conscious of the time. So we are about 25 minutes. So shall we just leave 5 minutes for wrap up and takeaways for yes? Maybe start with Carrie.
I think the key takeaway, I think, especially that what we have seen that we talk about the licensing, the landscape in these two different countries, and I'm sure that on the ground here there's also a lot of founder as well, and we'll think about, okay, should I move to Singapore, should I move to Hong Kong, and for me I will have the advantages because I'm born in Hong Kong but I'm based in Singapore for 13 years, right? So I know two places, but what I feel that one of the things that from the talent perspective is not all fit in one size fits all, right? So you have to base on what kind of the talents that you need, and then you need to see what kind of like the countries that you need to tap on the talent. So I give you an example, like maybe talking about just now, we're talking about institutional sales. Singapore definitely is a good place. And then operation, you can consider Malaysia and Hong Kong. Okay, what are some of the talents that we can tap on? I think some which is in the strategy role, trader, because Hong Kong, all the way that we have a very strong the trade fine and also the capital markets experience. I think if I'm looking for trader, definitely I will go to Hong Kong, right? Yeah. So I think you need to think about what kind of the talents you want, and then you need to see that what kind of the talent pool that you need to tap on. Can I say one more thing, if that's okay? Also the cost, because in terms of the employment cost, which is very different compared Hong Kong and Singapore. In general, maybe Singapore, the salary, which is slightly lower than Hong Kong, but we also in Singapore we have the hidden cost, which is the statutory cost. One of the things that which is the CPF. CPF, everyone know about it, 70%. Right now also increase the threshold. I think it's, if my calculation is correct, it should be 1560 cap for the employer, the contribution. But Hong Kong, just only 1,500 cap Hong Kong B, right? So it is a huge difference. Statutory benefit, the benefit in Singapore more. For example, you need to offer the childcare leave, paternity leave, and also maternity leave is also longer compared to Hong Kong. And also the regulation, I think in terms of MOM, we also have a very structured and stringent employment law as well. So which will also pose a higher cost in terms of your HR, the compliance as well. And you may need some expertise like Techlinker, and then to help you on all those payroll support as well, right? Or recruitment support. So I think these are some of the things that I will say that is in terms of the cost that is something that you need to consider. Maybe don't look at just the absolute number on the salary that you offer, but you also need to think about what are some of the actual employment costs as part of your consideration for which countries that you need to tap on.
A lot of hidden costs. Yeah. Louie?
I think I won't exclude, well, you have to be either in Hong Kong or Singapore. I do think, I love to say that we are not in competition with Singapore. Actually, I do think we're working with Singapore. We are tapping in different markets. Yes, Singapore started first, and then they sort of bring back a bit because of what's going on. Hong Kong is slowly catching up in regulations, but before, I can guarantee you a lot of people are operating in Hong Kong without a license anyway. But now that you have a license, people are making a big fuss about it. But to me, it's good that SP is recognizing something and start to give up licenses. I think the whole industry needs to be regulated because otherwise it's too much scams. So I would always encourage people look at both jurisdictions. If your business allow you to sell in both jurisdictions, I think you should, because it's just different markets. Talent-wise, yes, Hong Kong is catching up, but yeah, we've got a lot of people coming from mainland China to so come to Hong Kong. So that will help a lot. But in terms of compliance, we still need to educate them as well. It's different. They're compliant, but they're compliant in mainland China. The standards or the requirements in Hong Kong is different. I always say that we are not saying that they have a low standard, it's just different standards. So we have to bring them up. It's up to people like us to tell what needs to be done. So I always tell my clients, make sure you look at both jurisdictions, assess where you put your business in. Maybe that you put derivatives in Hong Kong and the rest in Singapore. Fine. It complements each other. So look, there's no right or wrong answer. It's whether your business model can fit into a particular jurisdiction. So do look at both, I would think.
And if we can diversify, right? Right. And Chris?
I tend to agree with Louie. I think similar to TradFi, everywhere you operate would require you to have a local license. So if a firm wants to set up shop and have boots on the ground and do marketing solicitation in any jurisdiction, most likely you will need a local license because that's where the winds are blowing and there's no turning back in terms of regulations on virtual assets, right? So the main questions that any firm needs to ask is that how valuable is that market to you, right? Do you need that license in, say, whether Singapore or Hong Kong, or could you survive without a license and operate from Hong Kong and maybe deal with some Singapore clients on a solicitation basis or vice versa, right? So if you want to be onshore in both jurisdictions, then you have to take a hit in terms of the expenses and cost. Because make no mistake, Hong Kong is expensive. It's not just getting a license rep. The license rep adds a 20% bump on the salary, right? Because there's so few ROs who are qualified to be a virtual asset trading platform.
There's one or two here.
Oh yeah. Okay. Yeah.
Introduce them to you.
So or to hire MIC, it's another 10-15% bump, right? Because they will have a statutory liability and whatnot. So those negotiations tend to drive the prices up. And some of the requirements also are different, right? Insurance, for example, 50% of insurance on cold wallet, whereas in Singapore there's no such hard percentage. So that just means that operating a custody business in Hong Kong would be significantly higher than in Singapore, and your pricing model will be different, right? So how would a Hong Kong custodian then challenge with a Singapore custodian in prospecting a global client, for example, right? So I think these are some of the dollars and these are some of the sums that the firm will need to make. But what Louie says is correct as well, right? If you're not in early, then you run the risk of being at the back of the queue, because right now, as you see all the consultation papers, being in the VATP queue, being a deemed licensee or fully licensed VATP gives you priority in terms of moving on to the next batch and the next license and the next regulated activity. So that if your firm has a long-term strategic commitment to Hong Kong and feel that that is a market that is must have, must go, then I would certainly encourage to start that journey early for Hong Kong.
And Louie is here to help. And Carrie as well.
And talents are here to help.
Yeah.
That's right. Yeah, so fantastic. Any questions from the floor? Yeah.
Yeah, it's good to see all of you, especially Louie. So I'm in the custody technology space.
Yes.
Right, and we do have a lot of clients in Hong Kong, and recently there was this consultation paper on custody that was released in December, which I thought was very, very good. It speaks a lot about MPC. And of course, traditionally, I think in Hong Kong, for the VATP, most of the time, the expectation is that if you want to custody the private keys, you will need to use HSM. But now the consultation paper talks a lot about MPC, and in your presentation, you wrote that term technology neutral. So you wrote that, right?
Yeah.
I just want to make sure that I
Politically correct.
Yes. So I thought it was very good. So we actually gave a lot of our feedback to the regulators, even though we don't need to be licensed as we are a custody provider. I just wanted to get your feedback. Do you think that this is going to be put into reality, that now the VATP providers can actually also use MPC or maybe even MPC with HSM to custody their private keys?
Okay. It will take time. At the moment, I was actually debating with a technology provider yesterday in a private meeting. The problem is the MPC model is there's no global standard now. Being an ex-regulator, I can tell you, I like a standard. I can rely on that. Oh, you got FLIPS level 3. Great. If anything goes wrong, it's not me. Oh, I got SOC 2. Right. Okay, I got ISOs. What? Yes, everything is standard because they have someone to rely on. That's why they got the external assessors coming in, because they got someone to rely on. That's what the regulators does. Look, no, I'm not being disrespectful to them. I understand. But the thing with the MPC model is there's no international standard. So you're asking them to make the judgment call themselves. They will take a longer time to make it. So let's say if you come in, your clients come in and say, I want to do the custodian, I want to MPC wallet. The question mark comes, would they approve you straight away? No. I do the easy job first, make sure HSM all approved. Then I'll start considering MPC. Then I'll look at your technology stack and what have you. Take some time. Okay? I think that's the reality right now. I'm not against NPC at all. In fact, I'm supportive. It's just that to get through the regulator is harder. I think the bigger question is not only for a pure custodian solution, is what happens if a dealer wants to take on the role as custodian as well, which normal TradFi you can hold client asset. Okay? I think at the moment, looking at what the requirement is, I think the normal trading desk may have second thoughts where they want to look after the client's virtual assets. There'll be a question mark. They probably need someone, although I know you don't do HSM, they will probably look for a technology provider like yourself to apply for license so they can still use the solution, but it's not housed within them, so to speak. So they have less of a financial burden or technology burden.
Yeah. Just to add on, I think the regulators also need to understand the technology. Yeah. And sometimes I think they think that if you use MPC, you can use HSM. If you use HSM, you can use MPC, and they think that it's mutually exclusive. It actually can be complementary, and they tackle different things. But we have in fact actually done a successful sandbox pilot with HKMA together with Bank Office Asia, where we integrated both.
Yep.
Yeah. And I thought that this is just my comments that I think one thing that Hong Kong consultation paper they did well, which I hope the MAS will look further into, is some of the specifics on MPC, especially for tech provider who hold one or two of the key shards, but not necessarily having unilateral access to the private keys.
I think to me is at the end of the day it's all about the risk that the regulator want to take. I think for them it's tough. Yeah. Really tough. I mean, they would not be the first one to come and say, "Oh, I want to take this on." No, they would not. They will wait. Okay, so let's just if let's say NPC somehow got standard out and it's globally recognized, high chance. At the moment, they will drag the feet. It's going to be tough.
Yeah. But that's better progress than what we have here in Singapore. So that's good.
Yeah. Well, as I said, if you want to go in, I would really strongly advise you to go and start talking to SFC. Because at the moment they have their own understanding of NPC. I know they've been meeting with people, they have an IT team meeting with people, but whether they know or whether they can learn from the question they ask in the presentation, I have question marks. Because you can't go deep. The only way you can go deep is to keep talking to them, educating them. Yeah. It's required. I don't sound bad on it. They need to be educated.
Thank you.
Very good question, very technical. Any other questions?
Sorry, just from a TradFi basis, more from the talent acquisition first. Does the Compass evaluation system in Singapore that was introduced 2 years ago make it talent prohibitive in Singapore? Because in my space, we see a huge challenge, no matter if it's the EP as passes. I mean, you're not a one pass holder, and that's kind of foregone to conclusion. So how do you see that from the space?
Yeah, I think the compact step one that MOM tried to put a structure there. Just to give a little bit of perspective on that, and they will look at the diversity, the nationality, salary. It's not very transparent. It seems like transparent, but it's also for me that it will also pose a challenge in terms of the talent acquisitions as well. So it will give the company, in the past that we are talking about without this system, it's just that they have to ensure that you post on the external, the job board, right? And to ensure that there's no talent in this space, and then they can get you the, the EP, the application. But now that they will give a lot of seems like transparent, but for me it's also a lot of hidden uncertainty that they will give you a more criteria. So I think definitely it will be one of the challenges in this area, and which I agree. So I think especially for the company that they need to start up, I always encourage them that if they can, they need to have a good mix of the balance of the EP and also the local. And in order for them that to easier to get more the talents that which is non-local or the PR. Yeah.
And just a second follow-up question, I guess. I know a lot has been talked about for Singapore and Hong Kong, but is there any view about Dubai, because that was mentioned, and
Yeah.
Korea, actually, because that's one of the biggest crypto markets, and they're
Yeah.
opening up with new legislation, right, and offering crypto services across the board. I believe it's called PASB. And which market, in your opinion, is actually best for cross-border services if you had to set up in one, as opposed to having onshore approach?
This is a very good question because recently I also support a client that which is looking at the Korean market. One of the key challenges is the language. Language is the key challenge, let's be honest. Though that I think right now, especially the new generation, they are still very maybe stereo abroad, but still English, the proficiency for them is a barrier. So I think unless that there's some requirement that the team that requires some of the Korean speaking, then I think Korea will be one of the good market. But I'm amazed that in this journey that doing the talent acquisition, I found that there's a lot of great talent there, and they are super respectful in terms of the interview process, even with the recruiter. They even prepare a presentation deck and then to talk to you. So I'm very amazed the whole process. I learned a lot. But I think, as I said, fundamentally it's a language barrier, right? But definitely in Dubai is definitely is a good market as well. And you will be amazed actually a lot of Singaporean, which is right now, which is resident in Dubai right now. So some of them that they feel too hot or too boring and they may want to come back. So right now that when we do the search, we also extend the search that which is in Dubai. So I think Dubai is also one of the good place for the talent acquisition, but not cheaper. They're not cheap because you know that in Dubai they can enjoy the benefit of no need to pay for the tax, right? So and then when they come back to Singapore and then they will asking on the same end, which means that they will ask for a premium on their salary. Yeah.
Yeah, but on your point, Abu Dhabi or Dubai and what have you, yes, I think on the surface, their licenses are very welcoming. They allow you to do more. But if you think about it, I think Chris can use it a bit more later, is that at the end of the day, if you get a license in Singapore and Hong Kong, you go and set up in the US, Europe, it's much easier. You do not get the same recognition from any regulators or from any licensed corporation or authorized institutional banks in other jurisdictions. For example, if I am running what I used to call the structured product, my hedging counterparty, if you are only licensed to Dubai, I mean, I have question mark whether you can satisfy all the investor protection that I want you to have. Whilst I go to Singapore, I feel much safer because it follows IOSCO rules. We know what we're getting. There's a certainty in the rule of law. No matter what you say about Hong Kong is the same. So I would say always explore those markets, but I would look into Hong Kong and or Singapore as my Asia base. Because Korea, and you can count Japan as well, language is a barrier. Okay, Japan is also like an own little island itself. It's got big crypto markets, but very much itself, language. Korea, exchange controls is also there. So you can't ignore that. Okay, it has a very big crypto community. They like crypto, but why there's not much people coming out of Korea is because there are much more controls that that meets the eye. So if you ask me, you want to say Asia, definitely Singapore, Hong Kong. You want a bit more looser application, go to Dubai, go to Abu Dhabi so that you can offer a bit more products. But be careful what you wish for, because I was told the consultants over there or even setting over there, it's not like Hong Kong and Singapore whereby you have professionals to help you out. You have to get local talents, and the local talent as in local Dubai, the Arab people, we don't know them that much.
Language is also a barrier as well.
Yeah, we
right?
need to know them. We need to get a local to help you out, and it's not rule based. Sometimes people based. My concern. I'm not sure about Chris, your experience with that.
Yeah, I think it really goes back to each firm's strategy, right? Gone are the days where you have one license in Bermuda and start operating globally, or one license in Bolivia and operate globally. So I think increasingly what you are seeing the global players is that they would have a license in each strategic region, right? Whether it's in MENA, whether it's in Asia, and Europe, obviously, right? Because MiCA will allow you to passport. So, and then North America, right? So I think this is where, depending on the company's strategy and the company's global footprint, if your client base is purely South Korean, then obviously you stay in Korea, right? But if you have global aspirations and you want to have payment rails connecting between Middle East, Europe, and Asia, then I think MiCA plus MENA plus Singapore or Hong Kong would probably make sense, right? So it really depends on your business needs, because in the compliance and legal space, it's very easy for us, right? The bosses make a decision willing to spend that 10 million and we'll get you the license, right? But it's end of the day, after you get a license, would the business be able to commercialize it? Because feeding the license is also a recurring cost, right? Opportunity cost from base and liquid capital, equipment cost, infrastructure cost, buying the HSMs, and renting data centers or setting it up at your own premises. All these are recurring costs. So, you know, I did the budget for the VATP, so I always cry when I look at the final number. So it is a huge amount, and so one has to be able to see through that whole journey.